The market is feeling the stress of the breakdown in trade talks between the U.S. and China, with the latest escalation fueling broad-based risk liquidation. U.S. equities are looking to extend declines below last week's lows, and risk-correlated FX is suffering as a consequence. To recap, the Trump administration communicated to China it had a month to secure a trade deal or face tariffs on all exports to the U.S. President Trump has denied claims U.S. consumers will pay for tariffs on Chinese imports, stressing companies would move production out of China, while also cautioning China against retaliation. Weakness in the yuan certainly has investors worried about retaliation, with the dollar-yuan rate rising to its highest level since early January. What makes matters even more distressing is a global interest rate environment still sitting at depressed levels, leaving very little room for any meaningful stimulus response from central banks and governments by way of policy accommodation or liquidity injections. The major currencies have been primary beneficiaries of the safe haven flow, with the US dollar bearish implications from tough trade talk resulting in yen, Swiss franc, euro, and sterling outperformance. Elsewhere, Bitcoin continues to rocket higher, extending an impressive run of gains, but also resulting in some very extended technical readings that are now begging for some form of a correction. But it's definitely a credit to the crypto asset that it has managed to inversely correlate with risk-off flow, at least thus far. Looking to Tuesday, key standouts on the calendar come in the form of Aussie business confidence, German inflation readings, UK employment and earnings, Eurozone industrial production, German and Eurozone ZEW surveys, and US import prices. That's all for now.